What happens when a tech giant spends billions to chase a breakthrough that keeps slipping away? In 2025, Mark Zuckerberg is betting Meta's future on artificial intelligence, pouring unprecedented sums into new hires and deals. The question is whether these bold moves will finally deliver results. Zuckerberg's frustration and the start of a spending spree. Mark Zuckerberg has never been comfortable being behind the competition, but that's where Meta found itself as artificial intelligence took center stage over the last 2 years. Rivals like OpenAI and China's DeepSeek were rolling out powerful models that developers embraced instantly, while Meta's own Llama systems failed to generate the same excitement. The breaking point came in April 2025 with the release of Llama 4. Developers expected Meta to finally deliver a large model that could rival GPT-5 and DeepSeek's latest. Instead, the company only launched 2 smaller versions, promising a larger behemoth model later. That bigger release still hasn't arrived, and internal concerns about its performance have grown louder. According to current and former employees, Zuckerberg was frustrated. He had already shifted resources away from Meta's FAIR research group toward its more product-focused Gen AI team. But the results weren't meeting expectations. Reorganizations followed, with Connor Hayes placed in charge of AI products and Amir Frankel and Ahmad Al-Dal leading AGI foundations. It was a clear sign that leadership was struggling to execute. By early summer, Zuckerberg made up his mind. If Meta's internal efforts couldn't get it done, he would spend whatever it took to bring in outside talent. The $14.3 billion scale AI deal. The first major move came in June when Meta finalized a deal to invest $14.3 billion into Scale AI. The San Francisco startup, founded in 2016 by Alexander Wang and Lucy Guo, built its reputation providing data labeling services to companies like OpenAI, Google, Microsoft, and Meta itself. This wasn't an acquisition. With the Federal Trade Commission already pursuing antitrust claims against Meta, Zuckerberg knew buying Scale outright would only add fuel to regulators' scrutiny. Instead, Meta took a 49% stake, mirroring the kind of deals Google and Microsoft had done with AI startups like Character.ai and Inflection AI. But the real story wasn't the money, it was Alexander Wang himself. Just 27 years old, Wang had dropped out of MIT and built Scale into one of the most valuable AI startups, with a valuation of $14 billion as of 2024. He had also become a prominent voice on the geopolitical stakes of AI, warning earlier this year at Davos that the US was in an AI war with China and would need massive computational infrastructure to compete. By bringing him in, Zuckerberg wasn't just buying equity, he was hiring a leader with experience across almost every AI lab in the industry. Scale had worked on 70% of the leading models being developed, according to Vahan Petrosyan, CEO of rival company SuperAnnotate. That meant Wang and his team carried unique insights into how competitors were building their systems. Inside Meta, Wang was tasked with setting up a new AI research lab, joined by some of his Scale colleagues. The hope was that his mix of technical understanding and business discipline would reinvigorate Meta's efforts after the Llama 4 disappointment. Scale AI's broader reach. Scale A. I wasn't just any startup. Beyond its commercial clients, it had begun expanding into defense. In March 2025, it announced a multi-million-dollar deal with the Department of Defense. Later in the year, it partnered with Meta to create Defense Llama, a customized version of the Llama Foundation model built specifically for US national security missions. The company was also growing rapidly on the business side. In mid-2024, it signed one of San Francisco's largest office leases, taking over 180,000 square feet downtown that had previously been Airbnb's headquarters. It was ranked number 28 on CNBC's Disruptor 50 list, highlighting its status as one of the most watched startups in the space. For Zuckerberg, adding a leader from such a central player was a way of signaling to investors and employees alike that Meta was serious about competing, bringing in Nat Friedman and Daniel Gross. But Zuckerberg didn't stop with Wang. Days after the Scale deal, news broke that Meta was planning to hire Nat Friedman, the former CEO of GitHub, and his longtime business partner, Daniel Gross. Gross had been serving as CEO of Safe Superintelligence, a $32 billion AI startup launched in 2024 by OpenAI co-founder Ilya Sutskever. Meta had actually tried to buy Safe Superintelligence outright, according to sources reported by CNBC, but those talks didn't succeed. Friedman and Gross had also been running their venture firm NFDG, and Meta now plans to take a stake in that firm as well. The two will work on AI products under Alexander Wang's leadership. Friedman's background in building developer platforms and Gross's mix of entrepreneurial and investing experience add even more firepower to what observers are calling Meta's new dream team. A Meta spokesperson declined to comment on the hires directly, but confirmed that the company will soon share more details about its superintelligence effort and the people joining it. The talent wars with OpenAI. Recruiting in AI has become a battle in its own right. According to Sam Altman, CEO of OpenAI, Meta has been offering extraordinary compensation packages to lure staff. On the Uncapped podcast hosted by his brother, Altman said Meta has dangled signing bonuses as high as $100 million, with even larger ongoing pay. "I've heard that Meta thinks of us as their biggest competitor," Altman said. "Their current AI efforts have not worked as well as they have hoped, and I respect being aggressive and continuing to try new things." Meta's own chief technology officer, Andrew Bosworth, admitted that the bidding war for talent is unlike anything he's seen in 2 decades at the company. Speaking on CNBC's Closing Bell Overtime, Bosworth said, "The market is setting a rate here for a level of talent which is really incredible and kind of unprecedented in my 20-year career as a technology executive. That means Zuckerberg's push isn't only about money spent on companies. It's also about record-breaking packages designed to pull individual experts away from rivals." Meta's financial commitment. Backing these moves is Meta's ballooning capital expenditure. In April, the company raised its annual capex forecast to between $64 billion and $72 billion, up from $60 to $65 billion. The increase reflects heavier investment in AI data centers and the specialized hardware needed to train ever larger models. On the earnings call, Zuckerberg described AI as the theme shaping everything Meta does. While much of the focus has been on building better models for developers, AI is also central to Meta's core business. Improving advertising targeting with generative AI has the potential to boost revenue significantly, while better infrastructure could reduce costs across Instagram, Facebook, and the metaverse. Still, the pressure is intense. Meta can't afford another stumble like Llama 4, which analysts openly called a failure. Gil Luria of D.A. Davidson, speaking to CNBC, stressed that Meta can't afford to fail in having the leading AI model. His view is that Zuckerberg is now in founder mode and unwilling to stop until he rebuilds his AI organization. How Wall Street is reacting. For now, investors are giving Zuckerberg some room. Meta's stock slipped about 2% in mid-June and was flat in the following week, but shares are still up 17% in 2025, outpacing both the Nasdaq and other mega-cap tech peers. Argus analysts recently reaffirmed their buy rating on Meta, raising their price target from $725 to $790. They pointed to Meta's ability to use generative AI to sharpen ad targeting as a particularly valuable opportunity, since advertising remains the company's lifeblood. The question is how long that patience lasts if results don't arrive. Lessons from past bets. For Gil Luria, the current moment echoes past turning points in Zuckerberg's career. Back in 2012, just before Facebook went public, Zuckerberg stunned the industry by buying Instagram for $1 billion. At the time, it looked like a bold, even risky gamble. In hindsight, it cemented Facebook's dominance in mobile. 2 years later, the $19 billion acquisition of WhatsApp brought similar skepticism before proving critical to Meta's global expansion. Luria now sees the $14.3 billion scale AI deal and the hiring spree as moves in the same category high risk, but potentially transformative. As he put it, he's going to rebuild the team, and they're going to come back. The stakes are enormous. If the dream team of Wang, Friedman, and Gross can deliver a model that finally rivals GPT-5 or DeepSeek's latest, Meta could reclaim its place at the front of the AI pack. If not, the $14 billion investment could go down as the most expensive mistake of Zuckerberg's career. What comes next? For now, Wang is settling into his role leading a new AI research lab inside Meta. The details of Meta's superintelligence effort are still under wraps, but the team is already attracting intense attention from across the industry. Meanwhile, the behemoth model that was supposed to headline Llama 4 remains unreleased. Developers are waiting to see if Meta can finally deliver something that holds up against its competitors. Until that happens, the perception that Meta is lagging will remain. The pressure is not only external. Internally, Meta employees have been watching the reshuffling of teams and leadership with some uncertainty. Ahmad Al-Dal's shift to co-lead AGI Foundations was widely interpreted as a sign Zuckerberg had lost confidence in his earlier leadership. Now, with outsiders like Wang being given so much responsibility, longtime Meta veterans will have to adjust to a new hierarchy. Mark Zuckerberg has chosen the path of bold spending, betting billions of dollars and his company's reputation on a small group of new leaders. Alexander Wang, Nat Friedman, and Daniel Gross are now tasked with reversing Meta's AI fortunes. Wall Street is watching closely. Rivals like OpenAI and DeepSeek continue to set the pace. The last time Zuckerberg was in a similar position, he responded with acquisitions like Instagram and WhatsApp deals that reshaped the tech industry. Whether this new round of AI bets will have the same lasting impact or become the costliest misstep of his career is the question hanging over Meta in September 2025. What do you think? Has Zuckerberg assembled the right team to catch up in AI? Let us know your thoughts in the comments.